Okay, here's the deal. You probably clicked on this video because you want to know about this stock, right? So let me tell you something about it. But first, we need to talk about a bigger picture. Everyone wants to buy the next big thing, the next Google, the next Amazon, but those opportunities, they're rare and hard to spot. What if I told you there is a stock flying completely under the radar that could be the next NVIDIA before it became NVIDIA? I'm not talking hype. I'm talking real fundamentals, massive margins, insider buying, and total domination in a space critical to AI, and the best part, I'm giving it to you free right here in this video. But first, let me ask, have you ever visited a vacation hotspot at peak season? It's overcrowded, overpriced, uncomfortable, just miserable. That's exactly what happens in the stock market. Once everyone rushes into the same play, the opportunity is gone. You're not going to make life-changing gains by arriving late. That's how we nailed 1,400% returns on Palantir and massive gains on NVIDIA. Not because we were smarter, but because we followed one timeless principle: invest in the picks and shovels of the next gold rush. And right now, that gold rush is artificial intelligence. While everyone's chasing the spotlight, language models, chatbots, flashy AI startups, the real money is going to the companies building the infrastructure behind it all, the boots, tents, and tools of this new AI frontier. Earlier this year, our community invested in Constellation Energy. It's already up nearly 50%. Then we picked VRT, that's up 18%. Just last week, we added another stock, and it's already showing a 5% gain in just days. Today, I'm sharing the next pick. It is a company I believe is the most underappreciated foundational AI play on the market right now, Cadence Design Systems, ticker CDNS. Cadence is the backstage mastermind of AI. They provide the software tools that allow companies to design, simulate, and verify chips before they're manufactured, essentially eliminating billion-dollar mistakes before they happen. Imagine a flight simulator, but for semiconductors. That's Cadence. They dominate a field called electronic design automation, the first step in the AI chip making process. Without them, AI chips don't happen. Period. Now, here's the kicker. Only 3 companies in the world do what Cadence does: Cadence, Siemens, and Synopsys. And Cadence is absolutely crushing the competition. Just look at the numbers. Cadence is growing revenue at 20% annually, while Synopsys is barely breaking even. EBITDA growth. Cadence is up 20%. Synopsys is down 16%. Free cash flow, operating margins, all massively in Cadence's favor. But here's where it gets really interesting. Despite all of this, Cadence stock has barely moved in a year, just 2% growth. With fundamentals this good, that's absurd, even more compelling. Insider buying has doubled insider selling over the past 6 months. This is my dream setup, a business that is improving rapidly while the stock price stays flat. It's only a matter of time before the market catches up. Cadence is like ASML or TSMC, monopolistic, mission-critical, and deeply embedded in every stage of AI chip development. They're working with the best foundries like TSMC, and they're years ahead of competitors. The company is innovative, has virtually zero customer churn, and benefits from multi-year chip design cycles. This isn't just a trend play, this is long-term, generational wealth territory. They've got 85% gross margins, 30% operating margins, more cash than debt, and forward P/E of just 45, extremely reasonable given their growth and monopoly-like grip on their niche. And while AI is booming, Cadence is barely being discussed. That's where the opportunity lies. This stock scored a perfect 125/125 on our Stock MVP Scorecard. That's almost unheard of. It checks every box: scalable, recession-resistant, monopolistic, cash-rich, innovative, and mission-critical to AI. Our price target. In 5 years, we see a bear case of plus 70%, a base case of plus 188%, and a bull case of plus 306%, with the stock hitting $1,200 per share. Look, I know what you're thinking. Another high price target. How can you be sure? Well, we're not. There are risks. It's a cyclical stock, meaning it goes up and down with industry trends. If AI slows, so might Cadence. But personally, given how central they are to AI chip development, I think their growth will continue. But you decide. I'm just laying the data on the table. If you want to learn how to find companies like this before they explode, not after the headlines, I invite you to join us at the Rock Academy on Patreon. You'll get full access to our research, tools, and strategy sessions, including the 2-hour deep dive we did on Cadence last week. It's risk-free to try for 30 days, and you'll be part of a community focused on long-term value, not quick hype. At the end of the day, we don't guess, we do the work. And Cadence is a company where the work and the numbers all point in one direction, up. Join us, learn with us, and let's build wealth the smart way.